So now we will discuss control frameworks and fraud. Things to learn is control framework, enterprise risk management process, what is fraud, nature of fraud, prevention and detection, and what are the fraud indicators. If we see in the company people are doing like this way, so we can sense it. Control frameworks means that if you are talking about internal auditing and internal controls, then how to be an effective controller in the company, but what steps you should take up. There are some school of thought. For example, if you are from America, we have American model of control. If you are from UK, you are from Canada, you are from other countries, everyone do the things in their ways and they get the same objective which people can do in other ways. So we have one framework, that is integrated framework, widely accepted as the standard for design and operation of internal control systems. This came into Watergate investigation of 1973-4 and revealed that US companies were bribing government officials, politicians and political parties in foreign countries. This is we discussed. These results was the Foreign Corrupt Practices Act of 1997. Private sector also responded by forming the National Commission on Fraudulent Financial Reporting in 1985. So it's just a progress on certain kind of legislation is known as Treadway Commission because James Tread was its first chair. Treadway Commission was originally sponsored and funded by 5 professional accounting organizations based in US in order to arrange a framework for the control. So this group, what they did is they make the committee of sponsoring organization, right? And they introduced with a model called 𝐶OSO framework. Then he says that the result was internal control integrated frameworks published in 1992, which was modified in 94 and after Sarbanes-Oxley in 2013. In Canada, we have Institute of Chartered Accountant of Canada. They give this framework. So guidance on control, that is called COC, based on his original title, Criteria of Control, published by Canadian Institute of Chartered Accountant. In UK, we have Turnbull, that is also like guidance for directors on combined code, that is by a Turnbull report after Nigel Turnbull chaired the committee. Generally, this is the trend in US, in UK, that the guys who are heading the commission, so legislation will be going in their name. For example, Frank. Dude is one senator, Frank is an assistant senators. So published by Financial Reporting Council of the UK and released as internal control. So it's just an introduction that there are certain kind of control frameworks. 𝐶OSO is one of them. Then this is for Canadian Institute, there is an COC, and from UK we have Turnbull. How they do? UK Committee on Financial Aspect of Corporate Governance, that was formerly as Cadbury Commission and Committee, issued its report about the same as the Treadway Commission in US. So it's all countries are working on their control frameworks, policies, procedures. It was subsequently blended with the report of 2 other organizations. The resulting combined code includes such recommendation for sound governance that CEO and the chairperson should treat individually. This is how the legislation comes, that something happened in US as a scandal, so they start studying. Something happened in UK, they start studying. So they are cross-referring as the learning behavior, that how to develop different scenarios. So far it's not that there is a combined code of control frameworks like in accounting standard we have IFRS or US GAAP. It's not that way. So we have different frameworks which we have to apply and learn from that. Because IT has increased too much, the role of IT in the business environment, so we have some IT control frameworks. One of them is 𝐶OBIT. 𝐶OBIT is originally was an acronym for control, objective for information and related technology, and COBIT 5 is the most prevalent. There is a very good qualification called CISA, Certified Information System Auditor. They COBIT, and this is their main product or area of interest. Then we have ESAS, that is Electronic System Assurance and Control, published by the Institute of Internal Audit Research Foundation as an alternative control model for the information technology. So these are different frameworks. Let's go ahead and study 𝐾𝐨 framework. What is 𝐾𝐨? 𝐾𝐨 define internal control as a process. So when we say process always in continuous nature. There are some question in the exam, which of the following is a process, which of the following is continuous monitoring. These are some small words. Affected by an entity, board of directors, management and other personnel, designed to provide reasonable assurance regarding the achievement of objectives in following three categories. First is effectiveness of operation, compliance in terms of applicable law, and the reliability of financial reporting. So if you go in a company, they have qualified CIA, CPA, CMAs. So we as external auditor will feel more confident that this company has competent resources, human resource systems, so we can rely on them. And you will feel a difference between those companies who has non-qualified people versus qualified people. And same way, internal audit department through internal control is trying to achieve the excellence. When you are putting internal control policies following IPPF framework, it will help you to do more compliances for the agreed legislations. Plus, trust on your company will build up, so people will start trusting your financial statements and reportings. And because internal auditing is mainly focused on day-to-day operations, efficiency and effectiveness, like how to make smart sale, how to make purchase, how to remove inefficiencies from the processes. This is all is the main you can say purpose to have internal control systems in a company. Thus, internal control intend to achieve three classes of objective. One is it's an ongoing process. I told you it's affected by people. So if your management is more committed about efficiency, effectiveness, they are a learning organization, they spend in training and development, they buy system and processes, so they will be more efficient. If management is vice versa, opposite, then you will see weakness in the systems. Adaptable to an entity structure, so your control system should be flexible, adaptable, so it can absorb the changing environment of the companies. Operation is, we say operation word when we are talking about day-to-day operations, the time we open the office, the time we close, anything happen like inventory movement, sale, purchase is part of the operations. So operations relate to achieving the entity mission. Appropriate objective include improving financial performance, productivity, quality, innovation and customer satisfaction. So marketing department, research and development, then finance department, quality department, all departments are part of the operational objective and efficiency. Operations objective also include safeguarding of assets. So inventory is your asset, then fixed asset, current assets. You have a lot of assets in the company. If you don't have internal control systems, people will take them at home, sell it. So you should have effective control systems. Objectives related to protecting and